Money Arata. You were being ripped off because of Seigniorage. Seigniorage is the profit for the monopoly of issuing money. And who has the monopoly of creating money? It is the government, the central bank of your country. And why is it a monopoly? Well, if you print money in your house, you will go to jail. But central banks have the legal authority to issue currency. That is why you're being robbed. See, when the monetary base increases, there is a dilution of your money. In a free society, if there is a devaluation of the currency that should pay for your work, you have the right to simply renegotiate an adjustment for higher pay, or you can refuse to deliver your product or service. That is, you can manage to protect yourself against theft. But in the case of Seigniorage, there is no such thing as a free society. There is an unequal relationship of subordination between a master and a slave. And you are the slave because you must fulfill the orders of the feudal lord, the government. If the feudal lord devalues the currency, you have no alternative because you're not in power. You're forced to accept it without complaining. Otherwise, you're going to be arrested. Therefore, the Seigniorage relationship is the one that you cannot protect yourself against wealth. You always receive less. You lose. Seigniorage is the profit that the government earns when it issues currency, or rather the difference between the value of the money that is placed on the market and the cost of producing and distributing that money. For example, imagine that the government spends 17 cents to produce a $100 bill. The $99.83 difference represents the profit that the government had to issue that money. Of course, there is a more complete explanation of all of that. It is much more complex. We'll get into detail very shortly. But even if you have never heard of Seigniorage, you can be sure that Seigniorage directly affects you, your life, your finances. It is just that the government's profit to print money is a kind of an indirect tax. It's a silent way to increase the government's reserves at the expense of our pockets. Now please note, this is not financial service. Read the full disclaimer before proceeding. Money is created from that. That is a way to sell your future to have fun today. Now how is money created? Basically, it is that. A central entity, the central bank, issues government bonds. These bonds are promises, saying that the borrowed money will be paid back with interest. The more bonds are issued, the greater the country's debt, the national debt. Now, who is doing that? Who's buying government bonds? They are the big investors, like banks and pension funds. Their motive is to earn the interest that is being offered. It is through the purchase and sale of government bonds that the government manages to inject or collect money from the market. Now, take a moment to think. Do you like this idea of issuing government bonds? Well, maybe you can do the same. You can go and start talking to your neighbors and your relatives saying that you need to borrow some money. And then you can sign pieces of paper promising to pay the money back with interest. Then you're going to be issuing your own personal bonds. Is that a good idea? Well, if you try to be responsible, you can use the money that you earn to invest in your productivity. Maybe that was the money that you needed to finally set up a profitable business. And then with the profits, you can pay off your debt and also the interest. But remember that there is always uncertainty, there is risk, no matter how good your plan is. But it's going to be even worse if you are irresponsible. In such a situation, you lie to people saying that you will open a business, you're going to be investing in yourself, but in fact, you just use the money to have some fun, to buy a luxury car, and this borrowed money increases your quality of life today, yeah, for sure, but you're compromising your future. In this case, it is obvious that it is not a good idea to get into that. And it doesn't matter if you try to be responsible or irresponsible, eventually you will have to pay the bill. With countries, the rule doesn't change. By issuing that, the country manages to raise money, to spend more today, and with the promise that this amount will be paid one day in the future. There is even the modern monetary theory, MMT, that says it doesn't see anything wrong with that. Those who defend MMT say that, well, the country has the power to print money, so there is no problem in taking on that, just print more money. What they ignore is the inflationary effect of this policy. We're going to be talking more about that soon. Money has changed a lot over time. There is more and more seigniorage and a theft of real wealth from our pockets. See, this is all very new. We have several videos from the Money Arata series in which we talk about the history of money in detail. You can see, for example, episode number 2 and episode number 13. So in today's episode, we're going to be very brief and talk about things in a simplified way. In the old days, a coin had the value that it carried in precious metals. For example, in Rome, the dinar was 4.5 grams of silver. It was worth the same amount of silver. But as soon rulers realized they could determine by decree that the face value of a coin could be different from the actual value of the material used to forge the coin. So the feudal lords began to mix other, less precious metals to mint their coins, but that didn't change the coin's face value. The difference between the face value and the real value in the precious metal was the profit from the feudal lord, hence the name Seigniorage. Did you understand? Imagine a medieval town where the feudal lord has determined that the local currency will be the draconium. It is already arbitrary for a feudal lord to define that a particular coin with 10 grams of gold would be worth 10 draconiums, whatever that might be. And it becomes even more arbitrary, even criminal for this feudal lord to define that the new draconiums will be minted with different types of coins that contain only 5 grams of gold, but still have the same face value of 10 draconiums. This has everything to do with our money these days. Since the 1970s, money issued by governments is no longer backed by gold or by anything other than trust that we have in a government that is issuing that currency. You can see the details in the episode number 20 of the Money Arata series. The Federal Reserve can issue as many dollars as it wants without having to worry about whether or not there is the equivalent value in gold stored in the vaults of the government. And that goes for virtually all countries in the world with their currencies materially backed by nothing other than our faith in the government. The power to issue money like this is very advantageous, even more so when there are laws saying that nobody else can issue currency and everybody has to accept the currency that is issued by the government. With this practice, the ruler can obtain revenue as they want without having to raise taxes, which is something that generally causes dissatisfaction in the people. But if that's the case, then why is it that governments don't issue just as much money as they need to pay their debt, carry out works, and fulfill the wishes of the population? Well, because if they do that, they will end up generating a lot of inflation. Inflation is an indirect tax. Without touching your money, it takes away your purchasing power. Milton Friedman taught long ago that inflation is indirect tax. If you have $1,000 in your account, inflation goes up. You still have $1,000 in your account. However, indirectly, these $1,000 now have less purchasing power than they had before inflation. You may not realize it, but inflation actually took away some of those $1,000 from you, or rather, the purchasing power of those $1,000. When the government issues currency, it puts basically more money into circulation in the market. And we all know what happens when there is too much of something in a particular market. There is devaluation. Therefore, there are those who say that issuing money without anything backing it is a little bit like a pyramid scheme. The government is devaluing the money that you've worked so hard to accumulate. It is diminishing your purchasing power while ensuring that the ruler has the revenue to do whatever they want to do. To prevent this from happening, Friedman suggested that issuing money should have a certain predetermined growth rate. Considering that the government's control over the supply of money always brought negative results for the economy, he proposed that this supply be controlled by mathematical rules that would prevent abuses by the rulers. Of course, no government in the world adopted Milton Friedman's idea. After all, nobody's going to reduce their own power willingly, unless it was money, with no honor, no central authority, no one to arbitrarily decide when more currency should be issued. That is, unless the money in question was Bitcoin. Bitcoin uses predetermined rules for issuing new units, and is therefore the only money without seigniorage. Unlike state money, Bitcoin is a private currency. It was created by private individuals to solve private problems. But that doesn't mean Bitcoin has an owner. You can always remember that Bitcoin and crypto are completely different things. We explained all of that in detail in the episode number 15 of the Money Arata series. Unlike cryptocurrencies, Bitcoin is a decentralized network without a central authority. Milton Friedman's idea of a currency with predetermined rules for issuing new units was followed to the letter by Bitcoin. Since it went live, everyone knows exactly the mathematical rules that lead to the issuance of new Bitcoin units, and everyone knows that no matter what happens, there will never be more than 21 million units of Bitcoin. And with that, Bitcoin uses technology to be a deflationary force. That is why, among many reasons, Bitcoin has generated so much concern among some governments. For the first time since the days of the feudalism, the lords of money began to see their monopoly to issue currency being threatened. At first, several governments tried to simply use the law to ban Bitcoin. And later they saw that this was very difficult to achieve in practice. Bitcoin is an unstoppable force, just like the internet. So they went on to the second step, which is to try to regulate, limit, control Bitcoin, which also proves useless in practice. With Bitcoin, it is not necessary to earn above inflation to be just trying to maintain your purchasing power. With state currencies always devaluing, anybody who wants to maintain their purchasing power of the money that they manage to accumulate throughout their lives needs to be risking their money in some kind of investment. In practice, everybody has to enter the financial market to at least try to preserve the purchasing power of the money that they have accumulated. Some people do it in a more conservative way, betting on bonds. Other people try riskier strategies like the stock market, but just one way or another, there is this financialization that ends up getting everybody who's trying to save money and not to see their money being eroded by inflation. It shouldn't be like that. It would be right for you to just have the freedom to simply work, save your money, and do whatever you want, without having to risk the fruit of your work in financial instruments that you don't even understand how they work. With Bitcoin, it's just like that. Since the total amount of Bitcoin to be issued is limited, and the issuance follows predetermined rules, your money, in theory, is not diluted. It is enough to just have the same amount of interest by the public in Bitcoin to remain constant over time, and it will always maintain purchasing power, because there is no way to be diluted, to be devalued with excess supply. Well, of course, this does not apply to the people who have a short-term view and they're just buying Bitcoin to find low prices, to try to sell, to trade at higher prices, and thus profit in terms of their national currency. But for the people who really understand the value of Bitcoin and have a long-term view, having part of their equity in a deflationary currency is an excellent way to maintain purchasing power over time without being forced to take risks in the financial market. Seigniorage is the profit that the government earns for producing and distributing money. It is only possible because of the government's monopoly to issue official currency. Bitcoin is ending this monopoly. For the first time in a long time, we have a backed currency with predetermined rules for issuance which protects your assets against the effects of inflation. To learn more about how Bitcoin works, now I want to invite you to participate in a special class of the Diamond Hands course by going to arata.se/diamondhands.